Yes, we are live. So let us start our webinar. Hello, everyone, and thank you for joining. My name is Olena Gryniuk. I am Regional Director for the Central Eastern Europe at the SME Banking Club, and I will be your host today. And today we will talk about customer-centric banking model. And from one side, this seems to be a very simple and basic thing that a customer or happy customer is in the core of each business and banking as well. So let us take the time today to discuss about what that really means. And I'm glad to be joined today for the discussion by Daniel Huszar, Head of Sales at FCOM, and Piotr Romaniuk, Financial Services Portfolio Director at StarCraft Technologies. Hello, Daniel and Piotr, and welcome.
Let me
see a full screen to see us all.
Hi, Piotr. Hi. Great to be here.
Yes, I would like also to mention that all of us, either we represent or engage somehow in small businesses, or we had an experience being a small businesses or entrepreneur, and we will speak today a little bit about and based on our business experience as well. So before we go to the topic, let me shortly mention organizational information. So our webinar is planned for 45 minutes. We are recording this webinar, so right after we finish, you will receive the link to the video. And today's webinar, we would like to build in the form of discussion. So please type your questions or comments into the chat right now from the start. You're welcome to do so. So let's go to the topic. So we decided to raise this topic today as all three of us have a feeling that banking still is seen by the banks very often from the department or product view and not from the customer point of view. And customers, and we as well, still receive from the banks offers that are not relevant to our businesses or to our private needs. And thus, this is making the conclusion that banks doesn't understand us at all and our businesses, and don't much care of our needs, like they just need to sell their products. So we would like to share today our thoughts on how to become customer-centric, why it is important, and bring your attention to that matter. And as I mentioned, you're welcome to give your feedback, comments, and questions right now. Okay, so let us start. Daniel, you will be the first to share your experience and thoughts. You're welcome.
Okay. So, yeah, thanks, Olena, for the intro. And so customer-centric banking is the topic, and basically my task now is to give just a small directory of topics that we will discuss, basically, and that you two will bring examples of that we can talk about later, and and also talk about the current situation and like some trends that have been there, and maybe they are amplified by COVID, of course, as everything digital is basically, and. I want to go back in the beginning to it's a famous philosopher of Canada, became famous. He coined the phrase "the medium is the message," and actually, this is a quote that I like a bit more, even of him, because it describes better his approach and philosophy to things, on how to see them, how to put them. We become what we behold, we shape our tools, and thereafter our tools shape us. So what does this mean exactly? And by tools, of course, I mean, the famous desktop computer. This is a very nostalgic image. You can almost hear the modem beeping and these kind of things, and the demagnetizing of your screen. It's a very different. This is the 90s, of course, or even mid 90s, or even a bit earlier. And we have big screens, we have stationary devices. The internet is still in its infancy, and we're still exploring it through our big screens. And this is how the internet has been shaped for us. We are experiencing it on on these type of screens. And well, today it's a much different world, right? Everybody's experiencing the internet very individually through algorithms, and also, I mean, you know, these people are really separated and individual on this picture, and this is really how I see it, that we're all, you know, it's very mobile, very individual, a small screen individual experience it, and separated from each other. And you could say that also this is like the same view that we will have from a department store. You know, every one of these could be a different department, a different silo, information, a silo or product in a bank, which are not interconnected at all in their experience, and they seem a bit static, and maybe through that. And yeah, it's just very symbolic in a way for that really static approach that we kind of want to change a bit, or advocate for change. And what else is true about the environment is this is a very low interest environment. So it's so you know, is I'm not we're not here to blame or anything. We're just here to share our experiences with banks and banking products. And it's very hard to make money in this environment, actually, because it's a low interest environment. And so a lot of the traditional approaches don't work anymore for a bank to make money, to give out a loan and charge interest. And on top of that, we are in this very modern mobile environment where we have to deal with neobanks and fintechs offering much better user experiences, and kind of, you know, cutting within the user experience and the products, and kind of cannibalizing the business and or small parts of the business. And in my opinion, even, you know, SME banking is some of the hardest parts, because you have all the expectations, or a lot of the expectations of the B2C crowd, basically, right? It should look great and it should be easy to use, where corporates, well, sometimes they don't even use some of the portals, that they just upload stuff via an SFTP server to some kind of server, basically. So I get it, you know, it's hard. It's really hard to make money and to come up with new ideas, basically how to help the customers. And then there's one hard truth is basically that the customer doesn't really care about our products. In my case, we make factoring software, so white label solution for a bank that wants to provide factoring or supply chain finance and these kind of things. And the customers of the bank, the SME especially, they don't care if it's factoring that gives them the liquidity or whatever it is, or some kind of straight loan. Of course, I mean, they see the differences, but they care about their liquidity. They care about maybe the insurance part of the solution, but they don't really care about it. So what I'm saying, or we will be saying, that there's a difference of just having a product, also almost like a silo, and kind of shoving it down the customer's throat. You kind of need to take this, or to have a more hybrid approach, for example, right? Yeah, like for example, PayPal in Germany does factoring for a lot of years, but they don't call it factoring. It's just a surplus product that they can sell if you already do business with them, through your online store or something like that. Like, would you like your money earlier, for example? Yes, this is the this is just the advantage, and they call it PayPal Plus or whatever it's called, right? But it is really focused on the need of the customer, and that's what we are trying to address, so that we don't think so much in information silos and in individualistic approaches, but we try, and I also work for an SME company. We always have been an SME company with different needs, and then trying to put the needs of the customer first and kind of force a change of perspective in this changed landscape. And now Piotr and Olena will have some really like personal examples further contributing to the argument. Yeah. Okay, so thanks so far, and I'm looking forward to your questions to this.
Thank you, Daniel. Yes, and I encourage our attendees, please type your questions. And Piotr, will you take the microphone now?
Yes, sure. Okay, let me switch to, okay, you do this for me. Thank you. Okay, hello everyone. My name is Piotr Romaniuk. I'm working for a SME, actually, StarCraft Technology. We are a technology and consulting company focused on not only on the banking industry and financial industry, but indeed my professional experience as a consultant is indeed done, or my experience come from over 14 years of advising customers in this industry, in banking, in payment service providers, and other financial institutes. So involved in many of the products that have been implemented and introduced to the market, B2B market and B2C market in Germany. So I had the pleasure to basically experience and see in my own eyes how does the innovation and thinking about the customer and the products evolve in banking, or maybe sometimes in some cases it doesn't evolve at all. So as said, I've been in the industry for a couple of years already, mostly in IT consulting, which means we were also by the mother of IT, working with many innovative ideas and innovative proof of concepts. Like, for instance, it's been already 2015 and 2016 where we were introducing and experimenting with confirming payments by a vein scanner or with the facial recognition. Of course, on a small scale, but the tests in production with a small amount of customers have been done already in 2016 and 15. So it's already 5 to 6 years as these kind of solutions were ready to be potentially rolled out for the broader customer range, but it never actually happened. And the first quote you can see here from the IBM Institute for Business Value was said in 2018, 3 years ago, and 2 years before the COVID pandemic happened. And already then, back then, the people in charge, CIOs and CEOs, not only from the banking industry, but in general industries where IBM is involved, so that the boundaries between industries are blurring, and they're seeing competition coming from totally new and unexpected places. Yet 2 years ago, when Deloitte published Digital Banking Maturity 2020 report, the E2E end-to-end digital sales process gaps were not closed at all, or of course they were closing. There is some job that was done, definitely, and the digitalization of the products was already going strong in the banking industry, but still there was a huge gap, and still is huge gap in the product and the process chains, which again results in the fact that is stated by the EY, Ernst Young company, in their report named How COVID-19 Has Sped Up digitization for the banking sector, and the respondents of the questions asked by the EY and for this report saw that 72% of rise in use of fintechs apps in Europe, which is of course absolutely understandable. If we think about what happened to the market, suddenly from day one or from one day to another, suddenly not only the stores were closed, the trains stopped to go from station to station. A broad lockdown was introduced, which also impacted the services like banking point of sales. So that means that people that were normally used to go and visit their advisor in their bank of choosing, they weren't allowed to do this. And since many of the banks, of the old big banks, tier one banks, were not really ready for this kind of sudden challenge, meant for the customers that some of the services and products were not able to use it. So for instance, some time ago with my own bank, I had a problem that I was on a vacation and I couldn't log into my banking interface. I couldn't do it because I couldn't. I tipped the pin, I think, 3 times wrong, and it got locked. The problem was I was already outside of the country, and I couldn't do anything to check the balance on my account. I could still pay. The card was still working because, of course, the pin is different. But I couldn't do any online transfer. I couldn't do anything. I couldn't even unlock the login online, and or even by phone. And then if we think that even if the normal let's say normal world stopped and the normal daily life changed suddenly, people still were needed. They still needed to use the some of the products, some of the financial products. They still wanted to pay online for the services. They might have still be interested in some kind of loans or insurances and stuff like this. And suddenly, the bank of their choosing that were apparently there to support for many years was not there anymore, and they couldn't provide the service. They couldn't fulfill the need and also the want of the customer. Let me switch. Yeah. So if we think about the digital transformation in the banking industry and the financial industry as a whole, it's definitely going strong. Year to year, you can see the many reports and analyses saying that this and that bank is now fully ready to be online, servicing online their customers and stuff. And this product is now online available. With this product, you don't really need to do anything but just ID yourself even with the webcam. But still, somehow the problem with the approach to the banking, approach to the services and products is actually in the very philosophy of the banking nowadays. So there's a lot of money that is being spent on infrastructure, on digitalization of the products, on agile transformation, on the way the banks are working internally. But it doesn't necessarily mean anything good, or doesn't necessarily mean any change for the customer itself or for the product palette. So in the end, the huge innovation and digitization of banks is not really very. It is visible for the customers, of course, because there are huge marketing campaigns explaining it. But as a customer, I don't really feel that I'm really profiting from it. So for instance, if we think about the old banks, right? I'm not focusing right now on any kind of fintechs. Most of the time that a big bank is doing digitization, it means basically that they take their most recent set of data, whatever it is, and try to make a use of it. And then they call it, of course, a huge marketing campaign, big data, data analytics, data science, we are innovative and such. The problem is, if a bank is on a market for many years, or even for many decades. That means that the data management and data quality should be absolutely crucial for their innovative journey. Because that means also that the data is most probably scattered. And this is something that I also experience with some of the Tier 1 banks, that part of their legacy data is still being used. It's archived in the tapes. Other part of the data, of the customer data, is stored somewhere in between the legacy systems and the new systems, and then also with the newest data banks that are being used for the new customers, for the new services, and for the new channels or omni channels. So the problem with this is, or the risk that can come up is, of course, the inaccurate customer segmentation, or even incorrect customer data, or even stuff like duplicates of the customer data, which block a theoretical customer of opening a new account, right? So there's a lot of focus that's being put on agile and cloud transformation. But the problem with this approach is, of course, it's very good, right? It's definitely good to be up to date with the newest technology that is allowing us, or should allow, banks to innovate their product portfolio. But the problem is they're digitizing the one shoe fit all products. So that means instead of using the technology, leveraging the possibility to create a hyper customizable products for each of the customer to fulfill each of the need, they take the old product and they put it in the new layout. And this is actually the first point, putting new layouts and design of the same customer-friendly approaches. So of course, the customer-centric as an idea in marketing is not new. This has been for at least a couple of years, and research, of course, for many years. And then the problem is that most of the bank, when they think that they are really customer centric and the strategy is really towards the customer, they're actually, in best case scenario, only customer friendly. So they will still use the traditional values and traditional customer segments that are based on status. So for instance, like private banking, you need to, in order to open an account, you need 25,000 euros of your actives, right? But the customer-centric thing about, or the philosophy about thinking about the customer is not only about where the customer is right now, but what is the customer life value. So where is this customer going to be in 5 years, or maybe in 10 years? Maybe there's going to be potential more profit from the customer if we create something for this segment. But of course, you need to have this kind of problem solved, like even the data problems, right? So when we're coming to right now to the pandemic situation, right? There is this meme that is known in the internet, that who led the digital transformation of your company, and it is indeed the COVID-19. There was, of course, many problems forever in the banking industry, also for external consultants and advisors. Like remote working was a problem because of the data security, because of that infrastructure. And then suddenly, when the COVID-19 hit and the governments and the world decided to go in the lockdown, suddenly it was possible, and suddenly the business was still going on exactly as it used to be. So now we are in the situation, actually, where the banking industry that has been in history always the one that is basically most innovative and then with coming up with new ideas. Like, even if we think about credit cards and introducing of the credit card, the first charged card was indeed a keychain, right, with a number. So the idea was to help the customer fulfill the need, where the customer has to pay for products or services, but not necessarily he wants to carry around I don't know, a big bag of money or paper money in his wallet, right? And right now we came to the point where our industry, banking industry, is mostly disrupted and pushed to the digitization and innovation by actually regulatory bodies. So exactly the same bodies that in the previous 20 years everyone was so mad about, that they make us do this, they make us do that, they make the KYC, the kill switches and stuff. But suddenly, actually, due to the changes like PSD2 with access to account, open account, or even Target 2 platforms and the instant payments for account payables, suddenly it's the regulator that is pushing the banks towards the innovation, and this is crazy. And even if we think about really the impact that the pandemic, the situation has had on a customer, on a everyday person, right? So we have no time. So people started working in home office remotely, right? So we don't waste the time commuting. That means we can use the time to actually think about some stuff, or maybe, I don't know, we might notice something like, oh, suddenly we notice some charges, for instance, charges for a bank account. And when we think also about the other effect, that people, a lot of people got unfortunately unemployed, they were forced to live more frugal and be more careful about their own finances. So in general, we started to think about the banks not only as a not anymore as a partner in life, partner in managing my own finance, but suddenly it's a cost center. It's something that I might even want to change, and I might change it right now very fast. Since couple of years, it was also pushed by a regulator that basically you need only one form to change the bank account. So if my home bank is now telling me, okay, you're gonna pay right now from next month €5 a month for the service, and I don't really have any service outside of the normal bank account, checking account, I might see around if there's a fintech that is going to give me exactly the same for less, or even for free, maybe of course for in exchange for my data, and I might decide that I'm fine with it. But then it really takes only one form that I can even right now fill online, send right away, and then the fintech is going to do everything for myself, for me. I don't really need to do anything. I don't need to go to the postal office or something to sign any documents, which is of course super comfortable, and especially if you need to live more frugal and you want some time to focus on things and think about things, yeah, this is something that you might do. And then going to the last point, or last slide from me. So the thing is, banks are really still chasing the customer wants instead of the customer needs. So it's like, if you think about an example from outside of the banking industry, about, let's say, Apple, right? When Apple introduced the first iPhone, people not necessarily wanted the iPhone. They didn't really even know that they wanted, right? They wanted to have an MP3 player. They wanted to have a phone. They wanted to have a digital camera. They want to have something, but they didn't think about their needs as a one device. And this is something that Apple actually fulfilled by overcoming the technical obstacles and not thinking in the customer wants, but in the customer needs. So, like I said before already, the customer-centric idea is not something really new. And even in 2019, Gartner published like a very small 10 sets of principle habits of customer-centric organization, which say basically respect the customer, respect the journey, follow up on the problems of the customer, listen to their problems, build a relationship, and be proactive. But the thing is, it's very valuable, but it's also very risky, because if you're doing the following up and being proactive wrong in a scripted way, where we know it all, right? When the bank just calls you and asks you, or gives you a great offer for another credit card you don't really need. And the discussion even sometimes feels like it's super scripted. It doesn't really feel human. And even the follow-ups are very often out of context. Some time ago, I had the discussion with my bank, where they called me to offer me a credit card. Indeed, I didn't want it, but I told them that I might be interested in a real estate loan. And they said, "Okay, that's great. We're gonna give your phone number and your mail address to the department that is specializing in this." Perfect. I got a mail from this department, but it came out. It was clear that it was just a contact forward without any kind of background, any kind of context. So I received a contact asking me, what the hell do I want? And it was so displeasing and discontent. I was such discontent as a customer that actually I started to move all my services from this bank to another bank that is giving me more the feeling that I'm being understood and listened to. So the last recommendation is make your services, make your products more about the customer, what the customer really needs, and try to go into discussion, try to talk to the customer, and not necessarily follow a script. So I hope it was interesting. Now I give my word back to Olena. Thank you.
Thank you, Piotr. Yes, I will actually continue your line about data, about segmentation and customer loyalty, because this is actually about customer centricity. Let me switch to my slides here. Yes, so I would like to bring here several moments in the area of customer centricity. So what is it all about? So yes, I would like actually to continue Piotr's thought that asking customer what they want, this is not a customer centricity. I mean, this could be a part, but this is not enough, even if the customers know what exactly they want, which is not always the case. So customer centricity requires actually banks to evaluate and to evaluate what they know about their customers. I mean, and to really better understand what is motivating their customers, what drives them, what are their values, and what are their interests. I mean, it's about really very deep relationship with the customer. So much more deeper than just on the transactional level, for example, that usually banks have with the customers. So this is the relationship which is usually we are discussing this also on our events. So of course, banks want and should be a partners for the customers and for the SME customers. But this requires actually knowing customers really deeply, and the data actually, I think, and this is the reality now, that the data is in the core of real relationship with the customers and really knowing customers better. And what is interesting is that banks have, I think, from all the financial players on the market, have the biggest amount of the information on the customer from different sources, like from the transactions, also from receiving some customer service inquiries, either to call centers or to the relationship managers. So across these multiple channels, they have this information on the customer, and very rare they use really properly and use this information to understand their customers. The problems and challenges are usually technical ones, meaning that these data are usually stored in different systems, which cannot be, connected or something like this. But this data analysis and creation based on this data analysis patterns, customer behaviors patterns, is really crucial for the understanding the customer. And the first step here is to start and to target customers is to do a proper segmentation. And this goes far beyond the traditional segmentation like micro customers, small businesses, mid-market, and large corporates. And this is even more probably than the segmentation based on the sectors. So first of course, this is the customer's profile should be based on these following informations like age, gender, geographic location. This is for the micros especially. This, as also mentioned Daniel and Piotr, that this behavior, this behavior as a consumer is actually very, very contributing to the way they behave as businesses. Because they, of course, expect the same customer experience, but also they, mainly as micros, 80% of them are sole entrepreneurs, so they are everything in their businesses, so they behave as they are, as the consumers. So income, of course, credit ratings, sector, as I mentioned, some technological preference, so do they prefer to do banking with a laptop or the mobile device, some personal preferences, meaning that, and also attitudes, meaning, for example, how fast they're making the decision of buying, for example, the product. And maybe even if the bank could track this, for example, that I am on the bank's web page and watching the concrete product, or maybe I received an offer by the email or in my mobile or online banking application from the customer and open it, and I'm thinking, I don't know, longer, for example, than 2 or 3 minutes, maybe this is the time where a relationship manager or should call to me and ask me whether I need factoring, for example, and not at 9 in the morning, when I'm thinking on my other business activities, and the relationship managers called me whether I need a factoring. No, at 9 in the morning, I do not need a factoring. But I might need it when I'm searching this information, for example, of some on some offers or some web pages of the bank, for example. Then transactional, of course, history on the customer, also the financial information that banks can have on the customers, like, for example, if this is a lending customer, then all the financial statements are available in the bank, or if banks, and now 30% of the banks, for example, in Central Eastern Europe implemented already e-invoicing and online accounting, then having this information, actually banks have all the data connected with businesses of the customer, all the data. So their task here is to start analyzing it, creating the profile of the customers, and also base this segmentation and targeting the customers. And this concerns also the prospects, not also the existing customers, also knowing and targeting the right customers for the bank. So, and these attitudes and behaviors are very important, because analyzing this, because customers they could seem very, similar, like they're from the one sector, for example, they have more or less the same income or something, but they can have different attitudes. For example, you might ask a customer if there is some financial problems, for example, during this pandemic crisis, and this could be then the next approach for the offering some governmental programs, for example, which are processed and proceeded mainly via the banks in many countries, or maybe some loans with state guarantees, etc. So not offering to all of the customers, but actually to the ones that are suffering, for example, from this situation the most. So this is about the segmentation. And the next, what I would like to bring here is CRM. This is the next step, which helps to first to have and storage the information on the customer. in the banks. And next, like this helps also to fulfill customer profiles, to build these profiles. Because, for example, when a relationship manager has access to such a system, which should be a centralized one, for example, I mean, Excel is good, but doesn't help maybe in matching the data and storing the information on the customer in a proper way, and then analyzing this data to create more correct profile on the customer, and then offer the right products. So this is what that helps develop customer profiles, and based on this, actually offer personalized services. Situation, if we look at the Central Eastern Europe here, the 60% of the banks said that they have it, so that their relationship managers have such a system, have access to it, and also have full customer profile, and they can really see the real data on the customer and contact the customer in the right moment, let's say. This is good because this was less even 2 years ago. So now the situation, like 2 years ago, it was less than 50%. And now I think that the need for the CRM and for the full information on the customer is really important. And the next, actually, what I would like to stress here is the customized offers and predictive analytics. This is the next step, I think, for the banks, that is to be proactive. So to be not only to respond to customer needs after the customers and a call to the call centers if they have some problems, or maybe contacted the ERM when they need something in their businesses, but to be proactive. Because again, if when the banks accumulating all the data on the customer within all the systems, so then, for example, then they can really offer a customer a product which is right in the moment, which is in the context of the customer's life and business, and which customer really need. For example, this I brought a print screen from the Idea Cloud. This is online banking from Idea Bank in Poland. I like this example because this is actually the moment and the way, for example, that I would like as being an SME customer to receive offers and products from the banks. And I think this is the right moment to sell and cross-sell. So, for example, this is a print screen from a business financial management tool. So having implemented and offered to the customer invoicing and online accounting. So this BFM actually here predicts the cash flow. And here I see that, for example, in a week or even tomorrow, I see that I will be in red saldo. So I will not have enough money to pay either salary or to pay to my counterparties, for example. And here system offers me to take a loan, take a factoring, or contact my relationship manager. This is, I think that this is a really good personalization and right moment, because this is individual for me that, yes, I will have such a problem, and this is good for the SME customers to show this, because usually SMEs or micros, they do not forecast much, especially cash flows. And this is also a good moment, and when a customer can appreciate the offer. Actually, if I, for example, here is a print screen from an e-invoicing service, but if go also one step further, if, for example, I'm an SME customer and I have with the bank everything, I have transactions, and even if I have another account from a different bank, now with the PSD2, a bank can aggregate also my transaction history from the other bank. as well. Then having e-invoicing and online account with this bank, actually banks has all the information on me, like everything. And I'm, as a customer, actually don't need to send any documents. And here a bank can be and should be proactive offering their services. So for example, if I issue the invoice as a customer in banking system, and they see or they analyze, for example, that usually my invoices not paid it in time, but delayed, for example, for 2 weeks. Or, for example, I'm issuing to the counterparty, which, and this is not for example, for the first time I'm issuing this invoice, and usually this counterparty delays like for 2 weeks or for months. This is a good moment to really offer me finance this invoice. Or, for example, when I see this here in the lists of the invoices in the system, in the invoicing system, that this invoice is not paid at the moment, and, for example, I really need money at this right moment, which is why I am, for example, logging into the online or mobile banking and watching this information right now. And this is the moment where I might like to have the factoring, for example, to finance this concrete invoice, because I have to pay right now for some services, for example. And this is the right moment to sell it to me. And as bank has everything on me, then this also will be right if this will be available for me, I mean, in 1-2 minutes, because they have everything, information for me as a customer. So this is about the personalization and being and offering in the contacts, and I think this is the future. How should banks actually sell and cross-sell products with real understanding of the customer needs. And this will be more efficient, because in this very right moment, I need this, as I mentioned, not at 9 in the morning when I'm thinking on my business stuff, but right now in this very moment, and this is a moment to sell me this. And the other, also Piotr mentioned about loyalty. I was also surprised. I was planning actually to do another webinar on the loyalty programs for SMEs. And when I was searching and for some examples here in the region, I haven't found it. So everybody is talking about importance of the customer, being a partner to the customer, about customer retention, but nobody in the region has loyalty program for the SME customers. So some programs for individual customers, for consumers are available on the market, but for the business customers, nothing. I found nothing. And this is for me a really red flag to do really banks care about their customers. So this was actually my part, and I would like here to invite Daniel and Piotr back for a discussion. Do you have some questions on or the comments? Because we beat out of time, but we can have extra minutes to discuss.
Of course.
Okay, well, we do not have questions. I want to ask you, Daniel and Piotr, because Piotr, yes, you showed this very famous picture what led the digitalization in bank, and it was COVID-19. How do you think? What will be the trigger for the customer centricity, the one that we discussed right now in our dreams? The one
I think
in our dreams.
I think the real trigger is gonna be once the banks really start to introduce everywhere the charges and charges for every single account, even for a customer account, and then the customers will start to go away, right? Like the example that even you said with the access to account and giving the other banks or other fintechs my whole data, transaction history, credit history, etc. It means basically I'm not really bound to one bank anymore when I want to get a loan for, I don't know, a new laptop or a car, right?
Yeah.
I can just my data is not anymore owned by one bank. So I think the more these kind of situations happen, that people are actually start to realize this, and I think this is something that is happening right now with the COVID, that people are just looking at every single cent, right? I don't want to spend my money for the bank when I'm not profiting from it. I mean, they already got my data, they already got my money, right? I want also to have something from it. Why do I need to pay for it? So I need to be, as a customer, I would like to be understood, supported, and advised also. I'm not alpha and omega. I don't know everything, right? So I'm assuming that in the banks there are people that are more smart than me in some areas, and I hope to get some kind of influence from them, advisement from them. And I think people will start, customers will start to realize it very, very soon. And I'm really curious if it's gonna move that way or not. Yeah.
Yes.
I would like to add to that. That's a very good point with the, let's say, with the charges, because now as just a customer, just a private customer, you need minimal service from the bank. Really, you just need an account, basically, right? To I don't know, to get your money, your employment check or whatever, and then just give something to your friends and pay the electricity or something like that. Yeah, and that's a trigger, and that's why. Maybe Piotr, because you feel so betrayed, right? Because it's such a minimal, and a lot of people, not just you, right? Because it's so little, and then we're gonna get charged for it. Why? And I'm like to add to that we will see, and we are seeing, like, big tech moving into the financial space, and that's what I've been saying. We've been discussing this for years now. That I'm not scared of the fintechs or the fintech approach. I'm scared of Google Bank or whatever, or Android Pay, Apple Pay, but because it's just the start. I'm not, and they will introduce services. It's so easy. It's so easy, and it will cost nothing, because they have the pockets to just say, you know what, you can get an account with us, and it costs nothing, and you just pay with your data like you always do. You do everything with us. Just one possibility, right? Yeah, and they could use banks as a means of payment transfer, like a backend software almost, like a payment processing in a way. But
white label, banks will become white label.
Banks becomes
for such big techs.
Exactly, and this is my real fear, that we have, like Piotr is absolutely right with what with the charges, but what if I don't get charges plus better service? And these guys understand me probably better, because they have way more data sources than my account. Account data, right? They know my search history, or Amazon, like some buying history.
And they can actually analyze this data. Yes, your behavioral, like a buyer's behavior. Yes.
But even like the very simple examples, a couple of months ago, I have also one of the private accounts with Revolut, and I use it mostly to pay for subscriptions online. So it's not a account where my salary comes in and stuff, but I use it really for the online shopping mostly. And the cool thing was I forgot to put the money in there, and in a couple of days we were supposed to be the Netflix or I don't know, Spotify, whatever charge, right? And Revolut noticed that, okay, there is not, I don't know, like €4 was missing, and they offered me, like, per one click, yes, no, hey, we see that you're lacking €4 for the Netflix membership. Do you want a simple credit line for €4 for this month?
It's like
it's a credit line that it's only valid for a couple of days until I pay it back. And it's only one click away in a phone. I got a notification. Hey, in 2 days the Netflix charge is up. So this is for me something that I noticed. I didn't really think that the €4 missing. So I thought like, wow, this is cool. This is really cool. Of course I can then just put right away the money in the account, but it was really cool. It felt like really cool.
In the context.
Good example.
In the context.
I have one question. If I may, to Daniel, or actually also to you, Olena. I don't know. You both know very well the factoring industry, and while we're speaking, there's one question that popped up into my head. So we have the target 2 coming to Europe, right? Which also gives the possibility for the B2C customer or C2C customers to do the instant payment, like within, basically like real-time payments, like with the credit card charges. So I'm assuming that some of the customer base of the factoring are also banks, or maybe not banks, but companies that are using factoring for a couple of days only because they're waiting for the big payment. What if the government now says, hey, every single bank needs to be on the Target 2 platform, which means every single company might use the instant payment and the real-time payment. So then the slow payments are out of the picture anymore. Do you think this is something that might impact the factoring industry or not really?
I would say minimally. It depends, because it depends on the market as well. For me, it's really hard to say, but it depends on the market because, for example, if you take the German factoring market, it's mostly like recurring. So you have a real contract with the bank, and you give them your whole book, your whole account basically, and they kind of I don't know, they cherry pick or they finance a certain amount of receivables or invoices, of invoices in that account, but it's recurring. And in other markets, of course, there are one time, you have a package of invoices and you go to some bank and say, what do you give me for this? What do you give me for that? But so I would say it strongly depends on the market. While if there is like this one-time factoring, or if it's a recurring fee, a recurring model, let's say. With a recurring model, not so much, because they also have other benefits. They're insured, and these kind of things. So they plan their cash flow with this. It's not just a cash flow injection.
I understand. Okay, thank you.
Well, for the SMEs, this might be, depends, because there are two moments why, for example, SME segment is waiting for the payment so long. So two main reasons. So first, of course, how fast the money are going from the counterparty. So if now it depends on if it is internal, meaning local payments, so this usually now within a day, right? So if this will be a real-time payment, yes, of course, like this 1 day lag can be covered, and this will, help SMEs to cover these short gaps. But the other thing is that this is mainly, for the SME, the main problem is when the counterparty is a corporate customer. And usually then such a customer or such a counterparty dictates the terms of payment. Exactly. And because of their procedures, etc., because to pay, to make the transfer, you need to have, through signatures inside the company on something like, and this is waiting in a line. So I think this is the main problem with the payments for two SME customers, and this could be, and this is one of the biggest pool for the factoring, when actually supermarkets or some unlike really big counterparties for the smaller businesses which are suppliers to the supermarkets for for bread or some potatoes or something, they are waiting for the terms which are usually even 3 months. For them to pay, and this is not because there is no instant payment. This is just because the policy and they dictate it, and I think cannot influence this at all. And this will be this pool for the factoring remains. And actually here, yes, we have a question. Yes, I would like to read it. Victor, thank you for your question. Banks usually provide separate services to the PI and SME. Do you know any positive digital examples from banking when client can get service as PI, so private individual and SME in one window?
Together.
I would start from, yes. Do you have some examples in your mind? From what we see here in the region when we were analyzing online and mobile banking solutions for the SME, so mainly banks now are targeting and doing the development of these applications into, separated for the private individual plus micro customers or sole entrepreneur. let's say, and the other mobile application and online banking with another features, access levels, etc. for the SMEs, so for big SMEs, or for the companies when you should have several employees should have access to the online banking or mobile banking, and corporates. So this the usual now. How the banks divide now the customer journeys for this, and years now. There are examples, mainly in Poland, that yes, you can log in once, being as a private individual or micro company or a sole entrepreneur, and you can switch in between your accounts without logging out. So you can have it in one application.
And also, just as an idea, and you can tell me if it makes sense or if it doesn't make sense. But if we would combine the private individual and the entrepreneur, right? If we would combine this data, it could give us a whole better picture of the individual and of the and we can do things with that. We can be more liberal with some kind of loan. We can be much more targeted, but in essence, I mean, we're helping the person, like, do you need, I'm thinking, we had this example in the pre-discussion of this, like, what about a farmer that we recommend your truck will, is kind of overdue, it will break down. Do you need a new truck? This is a loan for the truck, for example, and it could be also because we can connect more data points wherever, like big tech does. It's kind of the thing that big tech is able to do, is already doing, and will do. So in my opinion, they could be great benefit for both the bank and the customer when combining these data points.
Yes, and this should be taken into the credit scoring as well, to see first of all the full picture of the customer, and second, if there is, for example, a non-lending customer, doesn't have history, for example, with the bank, or never had a loan or something, then the behavior as a private individual can be taken into account, because micros and PIs, they behave the same. I mean, the behavior patterns are more or less the same. So that's why, yes, this can actually increase the access of SMEs to get financed.
Yeah, I think it's a very cool idea, but the introduction and implementation might be also very challenging, because, okay, if we speak about SMEs and PIs, they're, legally speaking, there are two different entities. So you cannot really have them under one hat. But I mean, okay, it's a legal discussion really right now, which I'm not a specialist in. So I can imagine that internally, somewhere in one of the middleware systems, I would like to have the data combined. I don't know, some kind of like a very small mini lake or a data lake or something like this, where all the data of the customer from different perspectives is stored, and then based on that, I can offer some kind of products, or like predictive loans, right? Your truck is gonna might break because it's already I don't know, so old. So maybe think about changing it. But the question is, of course, how it would be presented to the customer, because this is something that might be interesting to the regulator also as a KYC perspective. So the idea in general, I think it's very interesting. I would really like to see this kind of products happening and being offered to someone that is both PI and SME.
Yes.
But I really don't know any example.
No, I mean, if you are a sole entrepreneur and then you are the same person, even in terms of KYC. You are the same person of being a private individual and sole entrepreneur. I mean, so the same document, the same ID, the same person. So it's, I mean, it depends, of course, on the legislation of each and every country, but we have examples when it is possible. Okay, and I think this will be the last question for today. So why not introduce for PI or SME one fee commission that include current accounts, saving accounts, debit cards, e-banking service, and up to 5 national transfers, utility payments for free? This is from Olena.
There could be money incentives in that too, and service incentives. If you have both accounts with us, why not? That's definitely easier to implement than the one with the tractor or with the
Yes.
I think I think that the answer to this question, I mean, okay, depends on the country, right? But let's say for Germany, I see why not, because it's just too good business. I mean, let's see the price catalog of the Commerzbank for if you're a company, the annually what you pay for the account is can be over 200 euros. Why would you then say, okay, no to 200 euros per year, and then here have everything what we already had for 5, right? And since there's really lack of competition, this model is still very, very alive in Germany.
But this is also, the challenge and the question how to divide the income from one customer. When we're selling the PI consumer products and we are selling business products. So this is the question of allocation of incomes. Existing in the banks, from the beginning of the segmentation for the dividing customers.
Exactly.
Entrepreneurs. But this also can be a good option, for the loyalty programs, because actually we discovered that there is nothing. For example, this can be implemented, for example, if what we see, I mean, a lot of examples, for example, in Poland for such free accounts could be either you are starting, I mean, you are either a new entrepreneur or the banks would like to attract some segments, and then you can have for free, like first half a year, for example, 6 months for free, then it will be charged. Or, for example, it can be for free while you have some, for example, turnover on your account. So you have incomes, you have payments from your current account, and in this way, I mean, you can have it for free forever, or you use your card. I mean, it depends on the triggers or the usage that you would like, to have. So if customer is making transactions using your current account, using the card, why not? I mean, this could be the criteria to actually for the even loyalty program for customer to stay with you. So okay, you are with us, you have your transactions, financial transactions with us, so then you have it for free. This is, I think, a very good actually option to retain customers.
Yeah, and the problem with loyalty programs in general. I mean, you said yourself that in the banks you didn't really find any example, but outside of the banks, the problem is the prizes, the awards are very often not really interesting. So I think this is something also part of the customer centricity journey that banks can do. Like, you don't have to think about, I don't know, cooperation with a gas station, as a loyalty program. If you see that your customer is using a month 4 out of 4 free ATM, you know what I mean, ATM gets the money from the ATM for free. Withdrawals, exactly. Thank you. 4 out of 4, then maybe, as a loyalty, hey, we will give you a fifth for free.
Yeah.
Just like, it doesn't have to be big. It can be small, but it's something that is, that is surprising to the customer, and then the customer might feel and might think, oh wow, this is cool.
Yeah, the stuff you actually need, and not some points at perfume store as a
exactly.
or
Yes, should be simple. Should be simple and transparent for the customer. Yes.
And I guess in that situation also some charges for the accounts are fine, because if I pay more for the withdrawal fees, then also the fee for the account might be lower. It might be fine for me. I'm fine paying €5 for the private account, but then, for instance, I would like to have the free withdrawals. 5, 4, I don't know.
So this is about knowing the final price, what the customer should pay for the service, and not to have situation when some new costs or new fees are arising when you started using the banking, I mean, more actively.
Yes, exactly.
Yes. Okay, thank you. I think we gave some tips to our attendees today how to become customer-centric, and I hope you found this useful. And thank you for your attention. Thank you, Daniel and Piotr, for your contribution today. And so thank you very much, and see you next time online. Goodbye.
Yeah. Thank you both.
Thank you.
It was a pleasure.
Thank you.
Okay, thanks.
Exactly.
Thanks
Thank you. Bye
everyone
bye.
for listening. Bye.